Welcome to We Are CC Podcast. I'm Tom Crown, crypto YouTuber, recipient of Best Technical Analysis BIA Award for 2021 in a lifetime in the crypto space. I'm joined by Poppy, community manager of RCC's analyst group in Discord, Oz, our resident Zoomer and day trader, Mr., a DeFi veteran, here to bring a decentralized perspective to our discussions. I think it's safe to say we're all a little more uncomfortable than last episode. The market's gotten a little spooky, and so let's talk bear. Poppy, where should we start?
Yes, hey, thanks for that opening, Tom. It's always a great day for me when I'm feeling a little bit stressed to hear your voice coming over the speakers. So bear, I think that, looking at the macroeconomic picture, and this is to some people, it's a big word, right? It's a word I don't like saying. There's a lot of macroeconomic factors coming into play right now, and not just the crypto space, but in all of the financial markets. You're going to see that is shaking up a lot of investors, a lot of traders' confidence. So the markets are kind of pricing in everything that's going on. And I think a good place to start would really be, let's go back to the basics. Let's go back to Satoshi, right? So for many people who hopefully know, but there is probably a few out there who don't know, the original cryptocurrency is Bitcoin, right? Bitcoin is, and I said it last week, is the granddaddy. I'm sorry, now I'm just getting the messages here. It seems like, hey, Tom, midstream radio check. Can you hear me?
Oh yeah, I hear you. I think we're good.
Okay. We can always take that out in post-production, right? So yes, Satoshi, the grandfather, not just of Bitcoin, but really of this entire space. It was all born from the invention, the creation of what Bitcoin was. But why did he make Bitcoin? Tom, I want to throw this one at you. Can you tell us why it's relevant in 2022? The founding of Bitcoin, the origin of Bitcoin?
I think this is best explained by looking back to the Genesis block. There's a message encoded there by Satoshi himself. It says, "The Times, 3 Jan 2009, Chancellor on brink of second bailout for banks." I think this is something that's always going to hold relevancy. Since the invention of a money printer, humans have seen their course essentially altered. This reduced the power, even in medieval times, and guilds, and it changed the social power structure. So too will crypto logic or cryptography, in the sense of cryptocurrency, as it expands out. And this year and last year, I think, really are the big times where we've seen the impacts. Go back a few years and Bitcoin was kind of a tinfoil hat conspiracy. Satoshi saw this. A lot of these, if you go back and read the original cypherpunks, some of their writings, you see that they had a really strong grasp of how they expected these projects to evolve in society and with people. They had a really deep insight. They expected countries to fight against the adoption of cryptocurrency. They expected them to use language like, this is only used by drug dealers and tax evaders. It's funny, this is exactly, you can look back years and years ago, they expected this to either become huge, a huge force in society, or to completely just bottom out and be a failure. Here we are 13 years later. I'd argue that we're closer to it becoming a huge factor in everyday society than we are from essentially it just being gone. I think that's pretty easy to agree with. I don't feel as if it's really lost any relevancy personally, and we see countries adopting it as legal tender. We see NFTs bubbling and people coming up to me in my own life and saying, "Oh, what is this NFT thing?" And these are people that aren't really technology people. They aren't tech people, and it's a fresh face. It's a fresh take, in my opinion, for the crypto space. And that's
Yeah,
kind of my thoughts on that. Yeah.
yeah, and Tom, I think one of the things. So if you look back to when Satoshi created Bitcoin, and it was just after the 2008 financial crisis, and something just kind of triggered him. He said, "You know what? The traditional financial systems, they aren't working. There's flaws. I mean, of course, they're not completely dysfunctional, but there's a better way to do this." Now, fast forward a little bit over a decade later, and what are we seeing? Well, shoot, this is a bit of a financial, I don't say calamity, but you just have record high inflation. And the solution to that can be as painful as the inflation itself. It's a very delicate balancing act that I can say with confidence I am not qualified to really have a professional opinion on. I trust the people, the elected officials, the economists to do that. But I am qualified to say that the real driving force behind Bitcoin and cryptocurrency is that you fiat currency like US dollar is kind of inherently flawed. It's very inflationary. Um, so instead of instead of risking my future on the dollar, right? What a lot of proponents of Bitcoin want to do is say, hey, put your money into Bitcoin. Maybe it's going to be volatile. Maybe it's going to have an occasional drop. It could be 10, 20, 30, 40, 50%. It does happen. It's still a new asset class. It can be a little bit volatile. But over time, and this is where you zoom out to the monthly, zoom out to the yearly. And what does Bitcoin do? It goes up and up.
Yeah, Poppy, talking about that, I think something that everyone can visualize is dollars only. There's only more dollars every, every second. In fact, 80% of all the dollars in existence were printed, I think, in 2020. The total supply went from 4 to 20 trillion or something like that. And the math is really easy for, I think, everyone to understand. That's 21 million Bitcoin divided by infinite dollars. I think that makes it just a mathematical good bet over time. And it's hard to like hold on to these words when the markets are so scary. But there really is a fundamental mathematical theme to all of this if you look into it. I think we're having some issues here. I might not be getting audio. Maybe we should talk about bear markets in general.
While Poppy's figuring out his microphone there, I did have some thoughts on that. It really is, like you said, Tom, super poignant the way, if you read the discussions that were surrounding the genesis of Bitcoin, right? What was called an email list server back then, right? Or a bulletin board, right? It's really eerie just how accurate their predictions are coming true. I think there is a little bit of wiggle room there as far as becoming that that currency, right? Becoming a vehicle for peer-to-peer payments, right? We are seeing a little bit of friction just with transaction times. The Lightning Network is helping to solve that, and I think it's really interesting to see folks like the Jack from Twitter, right? Cut on over to the Block, the newly renamed version of Square, and integrate Lightning payments, right? So there is that movement still towards achieving that vision. So, all that to say, my point was, the predictions are coming true, or the expectations set by that founding team are playing out for Bitcoin. It's just taking time, right? So if you do hear that FUD out there, that fear, the uncertainty, the doubt that tries to take down Bitcoin with respect to, oh, it can't ever be used as a payment solution, as just that one example of FUD, right? Um, make sure that you are vetting any information that you hear, because it's easy to just go off somebody saying, oh, it can't be, it's too slow. It's easy to just internalize that. But if you zoom out a little bit and within the context of everything that's happening in the ecosystem, I think it's really, really amazing to see everything playing out as expected.
It's almost as if they knew something back then, right?
Right. And I think it just really takes a little bit of eye opening to understand kind of the fragility of the traditional fiat markets, right? And the underlying issues with money printers, right? And there was that understanding, I think, from that core team of the unsustainability of it all. So, fast forward, and now we have multiple types of kind of quote unquote hard money crypto solutions out there. And I think that is super interesting.
You touched on greed there. I think it's probably a rare feeling at the moment, greed, but on the other hand, maybe a common feeling right now is fear. And maybe Mr. Oz, you want to jump in here? Might give us some insights maybe on fear and what you're seeing with people, and maybe your personal experience on wrestling with your own fear.
Oh, so I mean, fear is a big thing in the market, obviously. Scared money makes money is the saying. But recently, these big dips, they've they've been making people scared. Obviously, there's a big dip. It's 20% and Bitcoin's almost down 50% from its all-time high. But you just gotta conquer that fear because what everyone's selling, that's kind of what they want to create. You know,
Yeah, it almost feels
the
intentional, doesn't it?
yeah, well, you have panic selling and you have all of these macroeconomic events happening, and it just feels too much like it's being controlled by the MMs, the market makers. And fear, you shouldn't really be feeling fear. If you're feeling fear, then you're probably overinvested, maybe, or just not comfortable with
Absolutely.
what's out of your control. But once you start looking at risk management options, like controlling how much of your assets are at risk at one time or in play, then you can start turning a profit and stop being so emotional when you start seeing these dips. And it's not always a bad thing to take profit, maybe reduce your fear over time, and yeah, you won't get accepted into this fear culture, I guess, is what we're kind of seeing at the moment when everyone around you is freaking out. They're saying house is burning down. It's not that bad because you've taken profit over time and you've built up a stack of USDT or whatever your preferred stablecoin is. So it's no big deal for you now, because now you can cash in and buy your coins back and build up a stack.
Yeah. So Oz, if you don't mind, I wanted to jump in. I think you hit on a couple points that are very, very important, very meaningful for traders out there. So, if this is the first time you've been through a bit of a strong downtrend, uh, we'll say we could be reaching the peak depth of a bear market. Um, One of the things that Oz touched on is having a strategy, but you want to have the strategy beforehand, right? Okay, well, Poppy, what happened if I didn't have one? I'm sitting here, maybe my bags are underwater, or maybe you lost a little bit of money. Maybe you sold this week at a loss. Let me just say, we've all been there. I guarantee you, everyone on this call, everyone you talk to in the crypto space, we have been there because that's just it's just how the space is. It plays with your emotions. It's a very stressful, very volatile space.
It's
And
abusive.
It is. This is nothing like stocks. This is nothing like any other speculative market. The amount of price action and the movement that you get in a 24-hour cycle, 365 days a year in crypto is equal to many years in the stock market. So if you've been here for a year, it's like trading stocks for 5 years. Congratulations, you are a veteran. But yes, developing a strategy and sticking to it. If you're going to do dollar cost average, you're going to buy each paycheck, and you're only going to buy, say, with 15% of your paycheck, you're going to buy some Dogecoin. Well, stick to that plan. Good, bad, and different. Whatever the market is, just do it, right? And same if you're doing kind of day trading or you're trading on lower time frames, maybe throughout the week, you're trying to get a low entry and then sell it at a higher price. Write down your plan. Have an entry, have an exit, right? Planning will take a lot of the stress away. The other thing, and I kind of want to revisit this, we talked about greed and fear. When you put the market into these terms, it will make a lot more sense for you. All financial markets, all speculative trading, it is nothing but a big cycle of greed and fear. When people are feeling greedy, it's because they think this is a good price. I want to get in because I think it's going to go up. So they buy and the price might go up. But then you get to a certain point and they start to get fearful that it's getting a little bit too high. I don't want to lose the money I've made. I need to sell. And then a few people sell. And then a few people see those guys sold. They see the price go down a little bit. They start to get more scared. And you can see where this is going. Now, if you layer on top of that, not just the retail traders like me, like you, we're playing with relatively small amounts of money, but you have hedge funds, you have institutions, you have whales that play with millions, heck, even billions of dollars that are out there with a multitude of trading instruments, trading technology, access to data that you may not have. And they understand these cycles of greed and fear too. So then you layer that complexity on top of a very volatile instrument, and that is crypto, right? Now you can learn to trade it, and you can trade it safely. But one thing you're going to run into over time, if you're in this space for more than 3 to 6 months, these kind of downturns in the market, they're going to happen. And maybe the first time, maybe the second time, you're going to be really stressed about it. I'm just going to tell you now. Maybe it disrupts your sleep. Maybe you're feeling a little bit unsettled. But just understand, it is a reality of crypto. If you're trading well, you'll avoid it. You'll save your investment. Maybe you'll even make some money. You may not every time, right? But keep in mind, I think, Tom, this is probably the fourth correction of over 50% in the past 4 years. So average of one a year, if that tells you anything, right? So,
yeah, it's not an if, people think, oh, that won't happen to me in life. It's pretty much everything. This is a when. Crypto has explosive gains, but it also has terrifying drops. And I think maybe a really good thing to talk about today would be, you touched on it, Poppy, maybe strategies for dealing with that. And Mr. hit it on the head, is my opinion too, is typically when we feel really fearful, it is because we're overinvested or over leveraged. Maybe we got a little too greedy, a little bit more money into something than we could really afford to lose. We need to be honest with ourselves. And I find that's a big problem, is really being honest. Is this amount of money important to me? People say no when it's going up and then change their mind. And it gets them on the wrong side of the trade. They're all of a sudden very invested or feel very in danger. Your urge to sell for a loss. When if they had from the start made a plan, as you said, Poppy, stuck to that plan, likely you wouldn't be experiencing those same things. In fact, DCA style, you might be happy or excited when price goes down because now your weekly or monthly, whatever DCA is able to purchase more of an asset. And you kind of saw the price go up and you saw that purchasing power diminish with that. And that didn't feel great. But now that it's coming back down, you might actually be in a better mindset. And the big thing for me is if you're in a panic or even a euphoria, you're not going to make rational decisions. You're going to make emotional decisions. And the market is the master at manipulating those emotions and those decisions. And they're going to put you in the wrong direction. I've heard it a million times from dozens and dozens of people of, man, I sold something and the next day or, instantly it went back up. Second they sold. And that's because they were experiencing that fear capitulation where every weak hand is shaken from the tree. And after that happens, which hopefully we're going to see here, hopefully that's ahead of us, market picks back up. It continues on its course without you. So developing a strategy and sticking to it is probably the most valuable information anyone can give you, period.
Yeah, and Tom, one comment I have on that, I think one of the really interesting things in any financial market for investors is you have mixed opinions. I know all of us on the call we're kind of big fans of technical analysis. Some people think, okay, maybe it doesn't work, maybe it's a meme, but you have to know that there's entire industries, financial sectors, institutions that do use technical analysis day in day out. They aren't just guessing. They didn't make billions just by pulling a rabbit out of a hat, right? There is a science to this, and that science really boils down to psychology. If you go back 100 years to some of the kind of the founding fathers of modern technical analysis, people like Ralph Elliott, people like W.D. Gann, they kind of were the first ones to tread that ground, to dissect what market psychology really is, and found ways to kind of rationalize it, to analyze it, and to use it to make more informed trades. But even if you do nothing else, even if you don't look up how those guys how they traded, just understanding that basic function of fear and greed, that cycle, is going to make you a better trader. Because I remember distinctly when I was first trading and I would see the price go down, and like you said, Tom, it would hit that point and I would sell and the price would just boom. Like 5 minutes later, it's back up and I would be so mad at myself because I thought, man, why does this always happen to me? It's because that psychology, because there's probably a million other poppies out there at that same point that capitulated. Someone that's a little bit smarter bought our bags. They had a plan, they executed it, and they knew that the price was going to go back up because they knew how to control their fear.
It can really feel personal, can it? Like you're being targeted, someone's watching you trade.
Look, you know what? You want to talk about personal. So when I started my journey, I actually started my trading journey well, a little bit. I'll say I made the poor choice of initially Googling different crypto groups, and then I looked for signals groups. And let me tell you, don't go and pay someone for trading signals. It's just a bad idea. They rarely work. That guy's making a lot of money off you, though. So I guess running those groups isn't the worst. But I found RCC, and it turned out there are some very good traders in that group, some very smart people. And when I went through my first bear market, you know what? They made fun of me. And that was a good thing. It did feel personal, and I'm glad it did, because it took that kind of poking, prodding. It wasn't cruel. It was friendly, but it taught me a lesson. It taught me that I needed to get smarter about how I traded, and I didn't need to be emotional about it. And those guys, I remember they told me, they're like, hey, Poppy, I think that the top is in, man. I think we're getting close. And this was based on actual technical analysis, right? This was based on hard facts. It wasn't just they think. But I was like, nah, man, it's going to keep going. Hey, lesson learned. And we all got to learn somewhere, sometime.
I think a good way also to approach, or at least eliminate some of the emotion, is to move slower. When I say move slower, yes, I'm talking about DCA, but really a layering strategy or a layering approach where You see the market move up, and no one can know. This is an important thing that I want everyone here to know is no one knows where the top or the bottom is, period. People guess and guess and guess, and a million guesses something's right. But that doesn't mean they knew, right? So what can we do? We can't know where the top is. What do we do? Well, we can kind of, I like to call it fishing. And so I go fishing, I set limit sell orders, and I layer them. And basically what I'm doing when I do this is I'm casting a net and I'm acknowledging I don't know where the top is. I can't, but I do know that the top has to be up, right? So I can sell slowly into rallies, and I will hit close to the top. I might not get it to the penny, but I'll get some orders in that are higher up. That is a very calming approach. It's very inactive as well. It's maybe not as cool or as exciting as some people want trading to be. I do trading content all the time, and if I did that content on how I really traded, like my personal trading, it would be the most boring content in the world. Because for me, let's say a few months ago, I was buying up some alts, I would buy them and just set sell orders and walk away and basically have alerts. And if an alert went off, I'd go, oh, cool, I filled some orders. It's very inactive, very disconnected. It's not maybe how movies portray or something. You're really running around checking tons of charts and things. That really is just going to tire you out. You're going to ignore your mental health. It's going to put you in a bad spot. I think really that all circles around to having a plan. So if you're listening out there, what is your plan? Like, do you have a plan? If the answer is no, this is a great time. A lot of people have walked away from the space, and that presents opportunity. It's a great time to figure out what that plan looks like for you, because it's going to be different for everyone. And the goal of that plan is to take care of yourself, take care of your mental well-being, your physical well-being. You need to sleep. That's a big thing. I know a lot of people haven't really slept in the last few days. You gotta get sleep. Your body is a machine. Your mind is a machine. You need to take care of it. You have to, just like a car, you have to oil it. You have to have the oil change. You have to have the brakes, whatever. Your body is the exact same way. You're not going to perform at peak if you're burning yourself out. And I'm guilty of doing this to myself. Crypto is very much a trial by fire. And if you can survive that fire, you can survive the education, you're going to have some success. Just hard to get past that.
You know what, Tom? I have a very short, good story about that. I have neglected my sleep in the past, and I really can't encourage you guys enough. That is a true story. I know too many people, I'll see them in there trading for like 16 hours, and that is unhealthy, guys. Crypto's 24/7, 365. It doesn't sleep. You will never catch every trade, I guarantee you. But one thing I did once was I was sitting there with my hand, it was in bed, and I was sitting there with my hand over the app, getting ready to make a trade. And I entered into, I don't remember, it was probably like a 10x or 25x or something, leveraged trade. When I fell asleep and my finger just tapped the button with no stop loss. So you can imagine I woke up liquidated. That was fun trying to explain that one to the wife. So I'm going to actually, if we can segue to a related topic, I want to talk a little bit about, I like bringing it back to the basics. I like talking about, for those especially that are newer to crypto, we want to make sure that nothing we talk about here is out of reach for you. We really want this to be accessible to all sorts, from beginners to maybe some of the more advanced traders. So let's talk a little bit about bull and bear. Those, if you're new, those are the two terms. Bull market, things go up; bear market, things go down. But it is a little bit more complex than that. And maybe maybe you could hop in here and give us a little bit of background.
Yeah, happy to. Excuse me there. I think it's really, it comes down to where the majority of the market sentiment lies. And, at a really high level, when we talk about a bull market, right? These are just terms that we're bringing over from traditional financial markets. So, Maybe to back it up a little bit more, let's talk about why we call it a bull market and why we call it a bear market. It's really easy to kind of just picture a bull, right? What do you see a bull doing when it's attacking? Well, they go into their target and they get, they put their head down and then they get their horns and push them up, right? Just kind of spear them with the horns and lift them right up. So in that way, a bull market is this imaginary kind of bull taking the market and piercing it with his horns and lifting up all prices, right? Really, if we're talking about Bitcoin, obviously, the price of Bitcoin relative to dollars. And the reason we call it a bear market is when things are going down. If you just imagine an imaginary bear, how do bears attack? Well, they're not lifting you up. They're going to take their big old paw, get up on their hind legs, and just swipe right down on you, right? And, really right now we are in a bit of a bear market for BTC, but really it is everything, right? And let's not forget that we're not talking about separate bull or bear markets between crypto and financial markets. There is still a good correlation there, right? And we touched on this in the last episode a little bit as far as the interconnects, the way that the crypto markets are now connecting up into these traditional equity, traditional financial markets. And through that lens, one way to think about it is, look, guys, everybody is down, right? Last week, if you looked at Netflix's price action, right? I mean, nobody is immune to these big movements. Even big, publicly listed companies are going through this, but the effect gets amplified when you cross over into crypto, right? Because if you do take that thesis, that stance, that hypothesis that the crypto space, for the traditional investor is a little maybe more risky than equity markets, through that lens, then the first thing that's going to get sold off in a down market is going to be your riskier assets. So what we do tend to see is amplification of market moves from traditional equity markets into the crypto markets. And that is to be expected, right? But when we are in a bear market, it's hard to see outside of your own portfolio. And to kind of touch on a little bit of like the way I keep myself centered, at least, is everything that Tom was saying, right? Let the market come to you. Put those limit orders out there.
Amen.
Go fishing and wait for the price, right? Because that's where you really get to train yourself in the discipline. And that's where you can really start to understand market movements while not being too psychologically invested in it, right? You're just waiting. Hey, I actually want the price to go down so I can fill my limit order down at whatever it was a little while ago, right? 30, 32, right? That's a great way to do it. For me, another thing that helps me kind of center myself is just looking at it through the lens of, always learning, right? I view my journey through crypto and more recently having crossed over into that neighborhood of the crypto sphere called decentralized finance. The thing that's led me through that journey and really has been my own guiding light has been following my passion, right? What do I care about? What is it about the narrative of, say, Bitcoin or Ethereum, or is it a chain link? Is it a Solana, right? What is it about these assets, these ecosystems that speaks to me, and let me go learn more about that. And in doing that, it helps me pull out and really try to divorce myself from price, like, spot price, especially. Because there's another way to think about it too. And, I'm sure we got some BTC maximalists on this. If you're not listening, I'm sure we got some sitting up here on the stage. Another way to think about it is, hey, let's not think about it in terms of dollars. If you do truly believe that Bitcoin is a hard currency, it's hard money. One way to look at BTC is how many Satoshis, right? How many sats you have, right? As long as you can continue to grow the amount of Bitcoin, the number of Satoshis that you hold, ultimately in the long run, you will be net positive, right? As long as you're not taken away from your dinner money or your rent money, it does help to kind of divorce yourself from hard fiat, price action.
Yeah, I'm guilty of. I call myself a Bitcoin maximalist, but in reality, that isn't true. It's not what comes to mind. My goal is exactly to stack sats, exactly the way you put it. I view my portfolio in sats. Goal is just to continue to acquire Bitcoin. I don't hate alts. I'm not toxic to people who have alts. I have more alts than probably most people in this room. Some of them are in good positions, some of them are in bad. But when you view your portfolio through sats, it's really the next level of this whole space. And I think the reason that it's such a good idea is times like right now, prices down, people are scared. Well, sats don't care about the price. One sat's one sat, one Bitcoin's one Bitcoin. Yes, your portfolio still fluctuates, but it's not as tied to dollars now. You're viewing it in a different light, and I found that to be very successful, to just stack sats, ignore the price, and just continue to accumulate, because I believe, and maybe this is a really important part of my crypto journey, is I truly believe in cryptocurrency success. I don't have any concern about it going anywhere, about it being, shut down. The more you learn about this space, the more you realize those are kind of crazy claims. And so, that being said, if I continue to do this, I know the price eventually is going to come back up. I don't know when, but when it does, I'm going to be positioned really well. And I saw this really, really come into play in the end of 2020, 2021. My portfolio had been in the dirt, just like people's maybe is right now. And price eventually came back up, and trust me, no one was thinking it would. There was a million voices saying it's never going to go back above 20K. It's not possible. Where's the money going to come from? Where's the new people, etc. It's always the same kind of FUD rhetoric every time. And I guess there's something maybe beyond logic here, because those things make sense when you say them. They do. But markets don't seem to connect with that logic in the same way. There's something extra logical about markets. It seems actually when people are the least interested in something in crypto is when they start to blossom. And we saw it back last year. We had lots of new people enter the space. And as soon as I would say it was that kind of peak adoption in the sense of new people jumping on board, that's when we saw price crash back down, right? It's almost it's counterintuitive, and that goes towards the fear and greed thing as well. Is logic sometimes is our enemy here. What is logical? It's kind of a crazy claim, but if you look back in history, it holds really well. Summarize that basically is, yeah, I love the idea. Look at your portfolio in sats. There's software that'll do that for you. It can be a little difficult to understand that at first, but it is a really successful way of doing it. And I would argue the longer you're in this space, the more you see it this way. I actually don't even know how long Mr. Mister has been in this space, but the things you've said lead me to believe you've been in for a while, because it's kind of an OG mindset. And all the OGs I know really have that same mindset. And that's maybe the core connecting element of their success is, the dollar amount day to day isn't that important, because I know I'm still building.
Yeah, well, just to hop in there, as far as how long I've been in space, quite a long time. I think, especially in terms of crypto timelines, right? But you nailed it right on the head there. As far as we've seen this all before, and if it does come off sounding a little too calm, like it's a little suspicious, why is he not freaking out a little bit more? And why do they keep saying just keep calm, right? It's because we've seen this before, and without question, there's no risk here for me to say, make some sort of prediction. We have been here before. We've heard all the same FUD before, and yet we're still here, and yet we're still multiple X over the previous all-time low. I mean, multiple, tens of X's at this point, right? So for me, I think it's really it's having that sense of gone through it, But also being able to zoom out and look at kind of what those past cycles look like, right? And yeah, Poppy, do you have any thoughts on that?
Yeah, thanks, Mister. So that is one thing that we wanted to talk about was how does this cycle stack up so far against some of the earlier cycles in crypto? Um, so if you look back, we'll talk about 2014 and 2018 very briefly, right? In both those cycles, once the price peaked, it produced a pattern, and I wrote about this on Reddit. So please feel free to drop in there. I think I don't know if it's it's probably not near the top, right? But I did break this down in the simplest of terms as I could. But basically, once the price peaked in both of those cycles, it took a strong downtrend. Think of a triangle flipped, pointed down, pretty strong. It's what we call a falling wedge. Um, that's a fairly bearish, but a very standard type of corrective pattern. It means price was going up before that. The greed hit peak greed, and then the fear kicked in, and the fear just drove price down, and it kept driving price down until people started to think, boy, this is a good price to buy back into. I'm starting to feel a little bit greedy again. And then that's where you find the floor and it starts to climb back up. Now, in the past two cycles, this took about 14 months to play out, more or less. And in both times, the total drawdown in the market was a little bit over 80%. Now, looking at 2022, we have a distinctly unique, uh, really unprecedented pattern here, right? So far, the structure of the market at a high level is borderline bullish. Now, I know it doesn't feel like that right now, but basically what the bulls have done this cycle is they've managed to hold the support levels in an uptrend trajectory. That's a sign of strength. Now it may get invalidated in the coming days. They may drop below that. We could go lower, but even if it does go lower, even if it does break below that support, I don't expect it's going to break so far down that it starts to resemble those earlier cycles. It just wouldn't make sense here. Um, and so what that tells us is we are seeing that growing adoption, that growing trust, just overall expansion of the market. And that is really exciting. This is such a great time to be in the space. And I think that's that element of looking at charts and zooming out to the big picture that takes some of that fear of the unknown away when you see that. And so I really encourage you, just pull up a chart. You can go to somewhere like tradingview.com, and I'm not endorsing them, but you can go there and pull up a chart for free and just zoom out to Bitcoin US dollar, put it to like 1 month, 2 month time frame, and just take a look.
Actually, let me add something here for you. Everybody out there, so BTC USD is definitely correct, but there's a little secret, and that is BLX, and that's the Brave Coin Index, Liquid Index. But what's awesome about it for this point is that it will actually allow you to go back through all of Bitcoin's history and price, and it is like basically strung together. And you can look back to when it was trading out at a penny and put your chart on logarithmic and take a look. And if you can go back those 13 years and look at the price today, you're going to see that this really is just kind of normal.
I'd go so far as to say it's healthy. The thing about bear markets for me is while you can't know where the top is, you can start to see when things are getting risky, right? And those signals of risk, those signals that indicate over exuberance, just too much greed out there. And this kind of goes back to, what we touched on the last episode was, think like a big boy, right? Think like a banker, right? And, when you see too much leverage out there, when you see folks that are just, pumping, green candles, period after period, and you start seeing other, tech TA components start to ramp up, that is when you're going to start to see a pullback, right? You can't just a healthy market is comprised of bulls and bears. In other words, it has to be comprised of people on both sides with differing opinions. And price is just a mechanism for folks to really put their money where their mouth is in terms of their opinion. I believe it's going to go down so much, I'm going to put my money on the line, right? I believe it's going to go up so much, I'm putting my money on the line. But it is really unhealthy when one side takes the reins too far. And so while this may feel really like a down, it may get you down the market condition currently. Just know it is healthy. It is not unexpected. It is expected, I would go as far as to say, right? It's hard to know what the scale of the retrace is going to be. But again, things are cyclical, and there is some comfort in knowing that, I would say.
Something that everybody might not be aware of is for every buyer, there is a seller, and every seller, there is a buyer. So when price is down like this, someone somewhere is buying what's being sold. The opposite is true when price is rallying. But I think that's something people might not be aware of. It's not just going into space or emptiness. There are buyers and sellers at every price point.
Yeah,
Absolutely.
and one thing I wanted to add, and I know we're kind of coming to the end of this particular segment here. So in terms of what should you be looking for in a bear market, or even just when price is down like this, where should you be looking to invest? Let me just give you a point of reference. So if you were to go back in time, you were to say, I'm going to use Cardano as a example. I'm not endorsing it. We never endorse anything on this. We're just talking about it as a point of reference. But if you were to look at ADA, you go back to 2018, and then when you hit that bear market in 2018, ADA dropped down 93%. Boy, that is scary. Now, if you were to go to March of 2020 and say, boy, this could be an investment opportunity, everything's down, let me pick up some stuff, and you picked up some ADA at that point, ADA climbed another 17,000% from March of 2020 to the peak in 2021. And it's actually true for pretty much all of the top altcoins. You're going to see that same trajectory. You can go and see it on the charts. It's mind blowing, absolutely mind blowing to see that kind of growth. But that's crypto. That went up 17,000%. Okay, Bitcoin's down, what, 50% from a high today. Well, if you play the numbers right, I think you're going to still come out ahead. You just, you got to go in with that plan. You got to go in with that strategy. And that's the key. The more you know, just like G.I. Joe. And so
Half
the
the
other
battle.
thing, thank you.
Sorry, man, I couldn't help myself. Every Saturday morning.
So the
Same.
last thing I wanted to bring up was also thinking about what's new this cycle. What wasn't there before in 2018, in 2014, and earlier? To me, a few things jump out. And again, this isn't financial advice, but think about it. What wasn't there before? NFTs, gaming, metaverse, that whole side of crypto, which is very accessible, very relatable, and to me, very fun. I love it. That's the space that I'm really curious to see how it plays out. I think that you're going to see some resilience because you're buying, say, you're buying a profile picture NFT. Are you really concerned about what Bitcoin's doing right now? Are you really concerned about a Bitcoin pair and trading against that to maximize Satoshis? No, probably not. You just like the art, you like the artist, you like the community, and you want to pick it up. So it's just something to think about as you're dabbling with, like, hey, what do I want to do? What's my strategy at this point? It might be something to think about. And that's where I wanted to bring in Oz and just get his perspective. Oz, I know you have done a little bit more in the metaverse stuff than some of us. I mean, what are your thoughts? Not necessarily specific projects, but like what do you think if I was going to go and pick up some stuff in the coming weeks, coming months? Do you think that's a good idea? Do you think that this could be kind of decoupled from the larger market, or what do you think?
Well, I think the metaverse in itself is like an amazing thing. It's very new tech. It's not incredibly new, but the popularity and spotlight it currently has is very new. So I think currently it's still very much in the grasp of Bitcoin and the macroeconomic effects. of just the whole market really. But in the future, once it moves away from that, it might stop following the same kind of reoccurring patterns of bear cycles and bull runs, because in essence, it's just a social space. It's a place where people can go to play games or just chill out with friends. And it's a mixed reality or virtual reality or sometimes augmented reality, virtual world. And it doesn't need to be anything more than that. It doesn't need a link to the market. It doesn't need a link to bull or bear. You don't need to speculate about it. It's always going to be the same thing. It's going to be an area of space we can go to. You can reflect. You can just chill out. And not only that, but they have their own stuff, like their own fundamental stuff that
Like they're
delinks it from Bitcoin, like the events. So Sandbox, that's currently one of the big three. They
Mhm.
have an event with Snoop Dogg, which that's fairly cool, and that's obviously going to be bullish for the coin Sand, but does
Yeah,
it really affect
yeah,
what it is? Probably
yeah.
not.
You're right. And I love that you brought up Snoop Dogg. Actually, I just followed him on Twitter today. So Snoop, if you're listening, man, please feel free to follow me, Big Poppy on Twitter, man. That would make my year. I'd flex that so hard. But seriously, he's really big into NFTs, and you do bring up a good point in that these metaverses, they're not just something we're speculating on here in the crypto space. Each of them is their own distinct ecosystem with their own currencies, their own games, their own like. And these are in the term sandbox in itself is exactly what it is, right? It's a sandbox. You can create anything in these, and not just sandbox by name, but all of those other metaverses that are being created, of which I'm playing in and creating stuff myself, and having a lot of fun doing it. And think about it, Facebook renamed themselves to Meta, one of the biggest companies in the world, renamed themselves to Meta this past year. So just think about where the space is going. And then Microsoft is looking at it for using it within the workspace. I mean, you think Microsoft Teams is cool. Wait until you're stuck in a virtual cubicle with your boss all day. I mean, that sounds even way cooler. So, you know, lots of things coming in the metaverse side of the house. And so, just food for thought. It might be one of those plays that you want to do a little bit of research on. And if you're big into NFTs, maybe look at that. But I want to pass it over to Tom Crown because I think, Tom, we might be at a point where we want to do a little bit of Q&A.
Yeah, I think this concludes the official part of the podcast. Maybe the closing words here to quote Satoshi, there's a lot of work to be done. I think that's a good wrap up. But we want to take some questions. I don't know how we're going to do this. It's going to read them from the Discord, or what are you guys feeling? Discord
Yeah,
from the Reddit?
Reddit or Discord, I would say just jump in. It is, in the future, we'll probably do a better job of this. One thing to keep in mind, and I really appreciate everyone that's listening, your digital patience, both with our technical issues and, maybe our stuttering sometimes. We do clean these up for the recording, so I am intimately aware of how often we say and breathe. So please forgive us.
Yeah.
But to the questions. So one of the questions, actually, this one is a very interesting one, which I would love to answer. Bitcoin, if someone's asking, is Bitcoin a store of value? So, Tom, I think this is a good one. I want to bounce off of you. Yeah.
So, is it a store of value? Is a logical question. Bitcoin is something unique. There's nothing that is before Bitcoin. There was nothing that existed that was whatever Bitcoin is. And so when people say it's a store of value, I think that really puts it in a narrow scope. We don't have many anchors outside of crypto that we can kind of connect our thoughts. And it's hard for everyone to imagine. I think this is where a lot of the rejection of the crypto space comes from is, if I introduce to you a new sports game and I say it's like football, you're probably going to have a pretty good idea of what I'm talking about, right? You're going to say, there's two teams, they're scoring points, one team wins. But when you say this is a decentralized, immutable, digital asset, there's really nothing to connect with. So as a store of value, historically, absolutely. Seen its value soar and grow over the last 13 years significantly, millions of percents. But I do caution people that are thinking in that mindset, that narrow mindset, that that's not all it is. Is it a currency? Is it a store of value? It's something new. That's really what it is. And maybe we don't have the words quite yet to define what it is. That's my answer.
Yeah, I think that's fair. If you look back in time, there's actually I saw someone do an interesting article where they talk about everything that Bitcoin's been, and it's been many things to depending on what part of its life cycle you're looking at it from. Another question I have, and I think I want to take this one to Mr. Someone was asking, this is really going back to some of the macroeconomic factors. And I know we try really hard not to get too technical here, but some of you may be wondering, okay, Poppy mentioned earlier, and some of the other guys mentioned that there's some macroeconomic factors that are impacting the markets. Mister, would you, in as simplest of terms as we can, could you elaborate on that just a little bit to help some of the folks out there that may not understand why the markets are kind of shook up lately?
Yeah. Well, I can try to. I'm not I wouldn't say, whatever I say from here on is truth, but here's my take on it at least. This is not financial advice. um, we're in this really weird place where the global financial markets are, for various reasons, kind of freaking out right now, right? And a lot of it really does have to do with the fact that, let's take the U.S. financial markets as an example, right? Because it is the U.S. financial markets, the traditional equity markets are the deepest in the world, which is to say that it has the most cash flowing through it, right? And because of that, when there's that saying, the U.S. markets sneeze, the rest of the world gets a cold. The things that are affecting the U.S. markets are really starting to spread around, and we are starting to see a little bit of a back and forth in terms of global financial market concerns starting to also come back and and for lack of a better term, contaminate U.S. sentiment as well a little bit. And speaking to that, at a high level, we're seeing unexpected interest rate rises that are just over the horizon in the US, right? And that speaks to trying to control the runaway inflation that we're staring down. It is related to the massive amount of money that was printed recently to really try to help shore up the system during COVID, right? And that has kicked off a psychological state of fear in traditional equity markets, right? And what you're seeing now is any bad news that comes out of the traditional financial markets tends to have larger effects recently than you would expect, right? For example, I don't want to go too much into Netflix because I'm a Netflix user, but just look at their market move last week, and to be honest, they didn't really miss by too much. It's something that really wouldn't have caused too much of a sell off in a normal market, but now we see just fear, right? And let's not forget that when we do talk about big money let's not call it manipulation, but big players being able to really influence price action, let's not forget that we've come off a period of incredible growth in all markets, up only, and that has put everybody into a really greed mindset until quite recently. So we're still having to unwind that a little bit, right? We do need to correct that extreme exuberance, and we're just not there yet. So people are still in fear mode, and that's what we're looking at around the world, right?
Yeah, that was good. I appreciate you letting me throw that question at you, Mister. I know that one was probably the toughest one that we'll have all night. But if you guys do want to know more and you want to deep dive it, there's no shortage of articles. Just look at like CNBC or just Google, the current market conditions. And it may take a little bit of research, but you'll be able to figure it out pretty quick that there's just a lot going on. But the more you know, the less scary it is. So the next question is, do we think that we're going to return to a bullish market? And what would be the best time to buy? How much money would be enough? Well, the amount of money that's really subject to well, actually, no, that I do have an answer on that one. And then I'm going to pass it to Tom Crown to comment on the rest. The amount of money that is right for investing is always one answer in crypto, is the same amount that you can afford to lose. No more than that, because there are people that have lost houses. There are people that have probably lost spouses, lost relationships. It's not worth it. Don't gamble with your life savings. Never ever do that. And please don't take a loan out on your house or anything crazy like that just because you think you're about to be a billionaire next year, buying a lot of Dogecoin or something. But for the rest of that, Tom Crown, what are your thoughts, sir?
Yeah, well, like we said in the bulk of the podcast, that's kind of the thing. No one can know the tops or the bottoms. We can get ideas. We can look at the charts all day, but it's very much a state of unknowing. That's uncomfortable for people. Poppy said is exactly on point. There is no one answer of how much is enough. You look back. I'll just say it. I got it like $150 worth of Doge years ago. That blew up. Last year that blew up. It was worth a crazy amount of money. So to say there's a certain amount doesn't really make sense. And the only answer is whatever you can afford to lose. Crypto has extreme swings, and that can mean small amounts of money can become big amounts of money, and big amounts of money can become small amounts of money. But the idea of I don't have enough is really self-defeating, because there is never enough. It doesn't matter how much you have, right? Like, there's no such thing as too many points if we're on a point system. And the same is going to be true here. Do I think we'll return to a bullish market? So this is just my opinion, because I don't know. No one knows. There we go. Get that soundbite. I'm sure Reddit will love that. You're right, guys. You're right, trolls. Nobody knows. That is absolutely certain. But in my opinion, I don't think that it is quite time. I don't think that we're quite there. That may change. We'll see into this year. We have seen 4-year cycles in the past, and we didn't get a blow off top in December last year. And people are talking about lengthening cycles. That's a possibility. I think something that's important to me as someone been in this space is we saw an expansion from 20,000 to 69,000. That doesn't really fit in line with anything we've seen previously. So it is possible we're looking at something new. I'm going to be hesitant to say that until maybe the end of this quarter, because it's crypto, and tomorrow it could all go nuts. You never know. But I still believe that we are in a downside, a really low sentiment area, and I think we're going to return. I might be wrong. I've been wrong in the past. I'm not afraid to admit it. But I don't know if I've ever seen people so scared as they are right now. And I remember very vividly all of 2017, 18, 19, 20. The fear that we're seeing right now is unparalleled. And it makes sense. There's a lot of uncertainty in the global markets and what's going on really in every country, everywhere. And typically in the past, those have been good buying opportunities. That doesn't mean that you want to throw all your money in right now. You go slow, can't overextend, or else you're just really going to get swallowed up by it. These are good questions. I'm happy we got to do AMA here.
Yeah, I think that was that's some of the best advice we've had on here. Thank you, Tom. I definitely like that. Go slow. Do not overextend. I can't say that enough. Don't go and ape your entire investment in one day. You're probably doing it wrong if you do. For the next question, all right. Whenever we go back to the bull market, do you believe that we will go back to the all-time high and surpass them? So one comment on this, looking back at this cycle, for all intents and purposes, realistically, the bullish cycle ended last March on a technical level. Right now, people will disagree with me on this. Tom may even disagree with me on this. But from a technical perspective, a lot of analysts looked at the period after March as a correction, meaning the market was then trying to shake out some of the bullish sentiment and trying to reset for the, whatever's next. And I did, I put the link up. That's part of what I talked about on my post on Reddit today, which is if we were in a what Elliott wave analysts would call like a flat correction, which means it kind of moves sideways, massive, what we call crab market. It's just crabbing along. And so, we've really been kind of in some sort of bear cycle for a hot minute now. The better part of a year, in my opinion, not professional opinion. So take that for what it's worth. So when we do go back to the bull market, I think, my opinion, one of two things could happen. One, it could just be another leg up into maybe the same range we were in before. Maybe it's what they call a dead cat bounce, meaning, and that's really a horrible term. I need to see if there's a better term for that. Meaning that the price starts to rally, people kind of get fooled into thinking we have another bullish breakout, and then the price just drops, the failed rally. Or we do go for that all-time high again. I have no doubt with a long enough timeline that Bitcoin will surpass 69K. I said it. I know people are going to give me crap for that, but I do believe. Yeah, absolutely. Given enough time. Does that mean it's going to happen this year? Well, we'll see.
Every step of the way that's been said, $1 was impossible, 10 was impossible, 100 was impossible. And looking back, it seems hard to think that, but these are the exact same thoughts we've had every step of the way. I've been told every price is impossible, and history disagrees.
Yes. Bitcoin disagrees with its critics quite often. All right. So for the next question, there was a question about day trading. Now, I don't want to get too deep into this one. I don't necessarily want to encourage people to do day trading, especially if you're new to the market. If you're not new, you probably have some experience and kind of have an idea of where you want to go with day trading, because there are many ways to day trade. But Oz, if I could pass this over to you to talk a little bit, just in general terms, the question is thoughts on indicators, support, resistance, trend lines. What are a few maybe basic tips that you could give someone just wanting to start out in day trading?
Sure. So when you open up a chart, you just when you start off, you see candles, and that's all there is. So the common thing people like to do is fill the chart with either indicators or trend lines, or even just rectangles that fill up the space, because no one wants an empty chart. And depending on your strategy, they can have varying results.